We had several banks collapse last week, shut down, and mortgage rates are dropping dramatically over the last 3 days. So I wanted to come talk about what's happening and what that means for you and for the housing market. So let's get right into it. So the largest bank, it was the 16th largest bank in the United States, Silicon Valley Bank in California, collapsed. Thursday, Friday, it really came to a head. They had 95% of their accounts uninsured. So we're going to talk about some of the things, what that means. But for the most part, it means that the federal government or FDIC insures accounts up to $250,000, okay, per entity per bank, okay? Now, most of their accounts, over 95% of them, were over that $250,000 amount because they did a lot of tech companies and a lot of small businesses. And so they had their payroll accounts running through this bank. And when they were collapsing, a lot of people are saying, get your money out of this bank, which caused a lot of people all at once to take their money out of this bank. And I'm going to go over two things that you need to make sure that you're aware of as how banks run. The other bank was Signature Bank. It failed, and First Republic Bank was failing, but they got some help from JP Morgan Chase, which is a large bank, and they are backing some of their deposits or some of their withdrawals, okay? So let's talk about this a little bit more. Silicon Valley Bank withdrew, the depositors withdrew $42 billion within 24 hours. The bank closed. So the Federal Reserve came and closed the bank because, again, if everybody comes to get their money at once, they don't have enough money. No bank has enough money to cover all depositors' withdrawals at one time. So the bank closed down on Thursday. A lot of people did not have access to their funds. And so that's when the government came in. And let me add this. So the government came in, the FDIC, the Treasury, the Biden administration, everything came in together, and they said that they would back all deposits. So, the standing rule is that they back deposits up to $250,000. Then they came in and said, we'll back all deposits. So even if you have $1 million, $2 million, they're going to back that because they wanted to avoid this happening at other banks, because if Silicon Valley Bank is having issues, then other banks may be having issues as well. And we all get nervous and we all start taking our money out of these banks. So the federal government acted, some people said they should have acted even faster. So that didn't happen on Thursday. But today, President Biden had a speech in which he said all of those deposits are going to be covered. He said they'll be covered by the FDIC fund, not by taxpayers. However, I want to make it very clear, and two things you need to make sure you know. Banks do not have all depositors' money. Again, no bank has all depositors' money. When you put your money into a bank, they're going to lend it out or invest it. And what's happening with some of these smaller banks that are less regulated than some of the larger banks, they had money invested in things that were lower interest, but then the interest rate started to increase, making what they had worth less. Okay, so that's a problem because you're not making as much money. The Federal Reserve was raising interest rates quickly. And so it all came to a head. They needed more money. They were trying to borrow money. They were trying to sell stocks, that sort of thing. That didn't work out. That got all their depositors nervous, and they started taking money out of the bank very quickly. Now that everything's electronic, people can come and take their money out very fast. So this was a major problem. And again, what the Biden administration didn't want to happen is have everybody thinking, hey, if this could happen to this bank, this could happen to other banks. So let's all take our money out of these banks. So they came out and said everybody's money is saved, we'll back their money, that sort of thing. So and the reserve requirement used to be that banks had to save 10% of all depositors' accounts on hand. So if you put in $100,000, they had to make sure they were keeping at the bank, liquid, so it's available for you to withdraw at least 10% of that. Because again, not everybody gets their money at one time. So if you were going to get it, it would be available to you, but it may not be available to everyone at the same time. And during COVID, they reduced this reserve requirement to zero. So they would encourage banks to lend out more money during this time. So a lot of this, the Federal Reserve raising rates, everything that have happened with COVID is coming to a head right now. So you definitely want to be aware. You need to be aware of what's happening. I know everybody works every day and got other things going on, but you need to be aware of some of these banks failing, because it may not just be these banks, it may be other banks, and it's going to impact the entire economy. The other thing I want to make sure you are aware of is that the FDIC, you've probably heard this before at other banks, you've seen their little stamp or commercials, bank commercials, that sort of thing. FDIC insures deposits up to $250,000 per bank. Now they were saying, hey, we're going to cover deposits even higher than that. So we'll cover all your deposits. So just be mindful of if that's going to go away, what's going to happen. I'm going to tell you, because they didn't say how long they were going to back all deposits. So I am going to tell you some things I think you should be doing right now with your money. All right, let me go ahead and remove this for a second and go back to what is happening. So in that Biden administration, they're backing all deposits, even above 250,000, again, to avoid bank runs, not just at regional banks, because Silicon Valley Bank was in California. It was in that region. It wasn't like, in Georgia or in Florida. So we have a lot of regional banks that are not everywhere. The ones you see in your community, like I'm at a local credit union in my community. So these are regional banks that are probably much more at risk of something like this happening to them. So they wanted to make sure that, again, people didn't get nervous about having their money in these banks. So these are the things I think you should be doing now. If you have more than $250,000 at any one institution, large bank or small bank, you should be moving that money around into separate banks where no bank gets over that amount, over that $250,000 amount. You need to make sure your money is in different institutions, because the FDIC insurance is only up to $250,000. So if you're a business, if you just have that, type of wealth, you want to make sure you are spreading that around. Number two, watch mortgage rates. Mortgage rates went from 7% on Wednesday or so to today at 6.57%. So they're dropping fast, because what's happening is there was a lot of discussion about how the rate hikes, that raising rates so quickly was going to impact the economy and what's going to break. Like, they'll stop when they break something. Well, they're seeing this. A lot of economists are seeing this as the first break. Like, you're breaking the banks, and people are nervous, they're losing money, that sort of thing. So they're saying that the Federal Reserve may not be as aggressive. And so that's what had interest rates beginning to come down. We still have inflation out there. So now there's uncertainty going into this week. If this didn't happen, they were, because we had high job numbers, they were saying that the Federal Reserve may increase interest rates 0.5% next week. Now that's totally changing to they may just stop raising rates altogether because of the impact it's having to the banking, to banks. Because again, banks, they raised interest rates so quickly, the banks were less profitable, couldn't handle it. They didn't have access to all of their money. So it really impacted banks, especially smaller banks, substantially. Now, the other thing is, and I've said this before in my videos, because everything's so volatile, don't be in a rush. And volatile means 1 week, interest rates are 6%, another week, interest rates are 7%. That's not normal. These large swings over like a short period of time is not normal. We're in a very volatile time as far as interest rates are concerned, and that directly impacts your affordability. So there's no rush, right, to get into housing. Like, it's 6.5%. Next week, it might be 5.5%. That's how quickly things are moving. Okay, so you want to make sure, or it could be 8%, right? You want to make sure that you are really thinking things through. You're looking at your budget. You're talking to your lender about locking your rate or not locking your rate. I have videos about all of that, locking your rate, paying points, all of that. So again, there's no rush to buy right now because everything is so volatile. And then lastly, the Fed meets the 21st and 22nd of this month. That could, depending on what the Fed does, that's going to be a major impact to the market. Because they're going to have to do something in reaction to the banks failing. So just be mindful of what's going on, stay informed, stay engaged. If you have any questions, please ask them in the comments. I will definitely be having a video come out after the Federal Reserve meets, or if anything happens between now and then, I'll definitely have another video coming out. So please ask any questions in the comments. I hope this helped you kind of, understand what's going on. I do have videos about what impacts interest rates. But again, we didn't see this coming. Not a lot of people didn't see this coming. The Federal Reserve was asked during their congressional hearings, they asked about, well, how do the banks look? And they really didn't do anything that much in reaction because they kept on raising rates. So just be mindful. I know there's a lot of people going back, but Monday morning quarterbacking and making sure everything, like how are all of the banks, how, who's close to failing. I would think a lot of people are saying this is not going to be the end, because this is just, one of the banks that might be, on the brink perhaps of having something happen similar to them. If you have any questions, please put it in the comments. I hope this was helpful. Please like and subscribe to my channel for new videos every week.